This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Washington was running out of gasoline on Friday, even as the country's largest fuel pipeline network ramped up deliveries following a cyber attack, and U.S. officials assured motorists that supplies would return to normal soon. The 6-day Colonial Pipeline shutdown was the most disruptive cyber attack on record. Widespread panic buying continued 2 days after the pipeline network restarted, leaving filling stations across the U.S. Southeast out of gas. With more Americans taking road trips as pandemic restrictions ease, pump prices are at their highest in years.
The unexplained suspension of operations of a key Chinese agricultural data provider has left traders, analysts and brokers scrambling for other sources of information on one of the world's most important farm markets. Beijing-based Cofeed, a private consultancy set up almost 20 years ago, had established itself as what many in the market regarded as the most comprehensive supplier of information on grains and oilseeds in the world's biggest buyer of soybeans. It stopped updating data on its website and in feeds to clients on April 29 without explanation.
Moving on to the top news in the energy sector.
Oil prices rose on Friday, reversing some of the previous day's sharp losses as stock markets strengthened and the U.S. dollar slipped, though gains were capped by the coronavirus situation in major oil consumer India. Colonial Pipeline said late on Thursday it had restarted its entire pipeline system and had begun deliveries in all its markets. The line is the major conduit from Gulf refineries to the U.S. East Coast. Oil is rallying because supply is moving again, whether it is through the pipeline or the Mississippi River, said Phil Flynn, senior analyst at Price Futures Group in Chicago. Tempering the excitement is ongoing concern about COVID cases in India.
Fuel retailers in Brazil have asked the government to reduce the amount of ethanol required to be blended into gasoline, saying a smaller production in the current season has reduced the biofuel supply and increased prices. Ficombustives, an association representing around 40,000 gas stations in Brazil, asked for the ethanol blend in gasoline to be reduced from 27% currently to 18%, saying the smaller sugarcane crop this year due to drier than normal weather reduced ethanol production. Nearly 90% of ethanol produced in Brazil is made from sugarcane, with around 10% being corn-based. The country's center-south cane crop is off to a slow start this year.
Next, we have the top news in metal market.
Regulators in the cities of Shanghai and Tangshan warned local steel companies on Friday against price gouging, collusion and spreading false market information, following a surge in prices to record highs during recent weeks. The most active steel rebar and hot-rolled coils on the Shanghai Futures Exchange both closed down 6% on Friday, but have jumped 34% and 43%, respectively, so far this year. The Shanghai market regulator issued a statement saying it and other authorities had jointly talked to mills about the runaway prices, urging them to set prices reasonably and help to stabilize the ferrous sector.
Gold extended its gains on Friday, buoyed by a dip in the dollar and U.S. Treasury yields after data showed U.S. retail sales unexpectedly stalled in April. Spot gold rose 0.6% to $1,838.05 per ounce by 1:44 p.m. Eastern Daylight Saving Time, 17:44 GMT, heading for a second week of gains. U.S. gold futures settled 0.8% higher at $1,838.10. Dollar and real yields need to remain supportive for gold to rise in the near term, said Suki Cooper, an analyst at Standard Chartered. We will now look at the top news in the agricultural sector. Ivory Coast cocoa grinding could drop by half to 25,000 tons in May, and even further in June, due to power shortages in the world's top grower, 5 sources, including some in the Exporters Association GEPEX, said on Friday. A drop in electricity generation in Ivory Coast since late April has left households and businesses fuming and cut supplies to neighboring West African countries Mali and Burkina Faso. Grinders will be allowed to export and process their beans elsewhere, likely in their European or U.S. factories, said industry regulator, the Coffee and Cocoa Council, CCC.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.